Awesome. Well, we are doing an affordability hack. This is affordability hack one of 10 or 15 or 20 or however many creative ways we come up with to make mortgage more affordable on the short term or the long term. My name's Rich, and I'm joined by Todd.Phenneger with Catalyst Lending Team. Hi, Todd.
Hello, Rich. Thanks for having me.
Yeah. So I'm super excited about this particular lending product. I've been having a lot of conversations with my clients about it. We've been talking a lot about it. And this is, I can't remember which artist it is, but please allow me to reintroduce myself. This is the 321 Buydown. And love to have you give just kind of a brief overview of what it is when I'm referring to when I say a 321 Buydown.
Yeah, sure. So a 321 buy down, which there's also a 2-1 buy down, and they operate the same way, is a 3-year stepped buy down of the mortgage rate. So most people are familiar with the basic concept of buying points down on a mortgage. So right now, nationwide average mortgage rate is at about 7%. So if you were to buy that rate down to say 6.75% on a permanent mortgage, you would buy that down with points, and then that rate would be lower for the 30-year term of the mortgage. The problem with that is typically it takes anywhere from 3 to 6, sometimes longer than 3 to 6 years to break even on that and basically recoup the investment in that permanent buy down in monthly savings costs. We believe that rates will likely come down sometime in the next year or two. We don't have a crystal ball, but just going off of some historicals, we believe that will happen. So we're looking at ways, how can we help offset some of the cost of these higher rates on a shorter term basis? And this is not an ARM product. This is a product where you have a 30-year fixed note rate. In this example, it's on a $465,000 purchase at 6.75% interest rate. Okay, we are buying that rate down for 3 years on a stepped level. So the first year it's 3% lower. The second year it's 2% lower. The third year it's 1% lower. And then on the fourth year, it goes back to your note rate, and then it remains at that note rate until the loan is paid off.
So I just want to summarize something real quick. Sorry to interrupt. I want to reiterate, it is not an ARM product. And the difference between like a 321 buy down is, at year 4, if you make 0 changes, you're going to be at that 6.75% in this particular example mortgage payment. Whereas an ARM, that rate may stay fixed for 5 years, 7 years, 3 years, whatever the term is. And at the end of that time, you're subject to whatever the fluctuation is in the market, and that's the unknown with an ARM. Is that pretty much a good summary?
That's correct. Most ARMs do have a cap where the rate can't go up by more than X percent on that first year adjustment. But yes, you don't know how high that end rate's going to go. So
here's the thing that I love about like the 321 buy down. Like when I'm talking with my clients is, we've seen price appreciation. We're still seeing price appreciation in our market year over year. And prices have just gone up pretty steadily over the last, 4 or 5 years. And now we're in a market where not only do we have high prices or higher prices, but we have high interest rates, which between the two of those makes it a little less affordable right now to own a home. And so, for the first 3 years, this makes it super affordable. In this particular example, on a 465 price with 10% down, your mortgage payment is almost $800 less in that first year, which is the equivalent of a $9,300 savings in that first year. And you can see how that steps up over year 2 and 3. But man, over those 3 years, like you're saving almost $19,000 in payments, in addition to interest that you save on the loan. And if rates are lower when you get out of it or out of that 3 years, you can refinance, right?
Absolutely. And you know, the cost of this product, what's really cool about it is how it works with the when it comes time to refinance. The cost of this product is a dollar for dollar what the interest savings is. So there is no fee that is going to anyone for offering this product. And this money, the exact cost of it. So if we were to add up the annual savings here, the 9314, the 6374, and the 3265, that adds up to your 18,955, and that is your cost for doing the buy down. The beautiful thing about it is if you were to refinance after 1 year with this product, then you will have only spent the $9,314. The remainder, approximately $9,500 to $10,000 sitting here, that amount is in an escrow account. And when you refinance with us, that money gets put down onto the principal balance of the loan that you're paying off.
Yeah.
So you still get the benefit of that, unlike in a permanent buy down where that money has gone to the lender and you never see it again. If you refinance and you haven't recouped that investment, that money's gone. You get this money back if you refinance before it's all used.
Perfect. And we have a little less than a minute left. So this is a contribution from the seller. So it's typically 4.5% of the purchase price, which is a heck of a lot cheaper than a price reduction, saves you a bit of money. And so Todd, real quick, like if somebody wanted to get a hold of you and talk in more detail about this, like what's the best way to reach you?
Best way to reach me is going to be via phone. My work phone number is 509-944-6206. They can also reach me via email, and if you can put this on screen, that would be great, at Todd.Phenneger@celebrityhomeloans.com.
Awesome. Well, Todd, I appreciate your time. We're going to do a series of these videos on affordability hacks in this market, and look forward to connecting with you on the next one.
Thank you, Rich.
Thanks, man.